welcome to another live stream with Breakout Solutions and Decrypting Crypto. My name is Wasim and I'm your host tonight. And as you guys are accustomed to, every Friday we come to you with the latest news updates, Twitter highlights, market watch, as well as adoption highlights. And we're coming up to the end of the financial year here in Australia. So it's an exciting day for a lot of people with a new financial year starting tomorrow. So let's get into it today with some big news coming out of the SEC and Coinbase. Countries changing their laws when it comes to crypto and Bitcoin. Other countries looking at working with Tether to adopt P2P networks, and a lot of great things happening around the world. And obviously with the Blackrock and Fidelity and Invesco, these guys coming in for ETFs. There's a lot of scarcity right now with Bitcoin, which is why we're seeing Bitcoin pumping. And we're just starting. A lot of people believe that we are just now starting in our in the bull run, the start of the next bull run. So it's exciting times ahead. So let's get straight into it, guys, and look at what's happening over in the news. So over to Bitcoiners, we've got Coinbase files a motion to dismiss the SEC case. So in this article, basically Coinbase, who you guys know, has been sued, just like Binance has been sued recently. They have been very, very vocal about their stance against the SEC, and they've also been speaking a lot about what they've been saying that they've been trying to speak to the SEC to get some regulatory clarity, but the SEC has been avoiding it. And then they turned around and sued them, and they said that they have unregulated securities on the exchange. So Coinbase has come back with their legal team and they are filing for the suit for the case to be for the motion to be dismissed, citing that none of the tokens that they have are actually securities, because according to the Howey test and the Supreme Court Howey's case, which shows that because buying crypto does not put you in a contract with the company behind it to make a profit, it's not a security. And therefore the assets on their own are not related to the company, and there's no guarantee or there's no promise of a return. So none of the assets the SEC has now identified are in fact securities, and for that and other reasons, secondary transactions in those assets are also not securities. None of these satisfy Howey's definition of an investment contract. In arguing otherwise, the SEC has advanced a novel construction of the operative term that is divorced from statutory context. The statutory Supreme Court and the Commission itself long ago agreed must form the term's meaning. So now there's a 7-week showdown where the SEC has 7 weeks to respond and also see what they're going to say. So another quote from the SEC's another quote about the SEC is even where the preferred construction colorable, the major question doctrine would consult against its adoption by this court and in favor of defense of the Congress's legislative prerogative to tackle itself major policy decisions affecting substantial industry segments. So as you guys know, the SEC has been really, really going hard against crypto, and they haven't been giving any real clarity on why they're claiming these are securities. So we've got XRP now in a court case with the SEC. We've got Binance. We've got Coinbase. We've got a lot of the banks in America no longer onboarding crypto. So it's getting harder and harder on crypto right now, which is exactly what they want to do, so that they can continue buying Bitcoin at a suppressed price. If a lot of this stuff wasn't there, I think Bitcoin's price would be a lot higher. Even here in Australia, we're starting to see more and more banks making it harder for people to onboard cash onto exchanges. Moving over to the UK, we have a different type of cases happening right now, where the actual government is now looking at recommending a new property law category for crypto assets. So in this article, they speak about that crypto assets are not the same as physical assets. They're digital assets. So it brings a whole new challenges and opportunities for lawmakers. So now they're saying, well, we should be creating a completely new form of law for digital assets and how you hold them, who owns them, and whatnot. And this is all coming from the Prime Minister of the UK, who's been pushing for the UK to become a hub for cryptocurrency. So Prime Minister Rishi Sunak said in April 2022 when he was the finance minister that he wanted to make Britain a global hub for crypto asset technology. He asked the Law Commission to review whether the current laws can accommodate digital assets. The Law Commission has opted to wield the scalpel, not the sledgehammer, with these recommendations. This will be reassuring for many in the industry. Adam Sennett, knowledge director of Northern Rose Fulberg, which contributed to the report. So basically, this is a very high degree demand. So there is a very high degree of demand for such laws to reform amongst consultees, market participants, and industry bodies. So they know that crypto is coming and it's here to stay, and they're realizing that they need to create laws that make it very easy for people to understand who owns them, how ownership is transferred, etc., etc. Moving on to here we go. Just get rid of that. Moving on to MasterCard, and MasterCard is still playing with new blockchain technology, and they're actually launching a blockchain app store. So what it is called the multi-token network, and it will allow for people to transfer tokens and token ownership through this network. It will be based on Ethereum. On Ethereum network. It's the first round of where they allow bank deposits and so forth to be all tokenized. So this is all leading the way with MasterCard, because they do realize that crypto assets are here to stay, and they need to have the infrastructure and the systems in place for people to use it. They're starting to see more and more people around the world coming in, more central banks, more businesses, etc., coming in wanting to use digital assets, and they need a place in which to transact. Now, look, my personal opinion on this is MasterCard is a centralized network. We don't know what they're going to do. They are part of the current financial system. They do charge very, very high fees. This is a positive step forward. And if they keep it decentralized and open source, then we can see exactly what's happening behind the scenes. All right, let's move on to the market update and the market watch. So at the moment, when we look at the crypto bubbles, we're seeing a mixed sea of green and red, with some things like FTT is up 107%. I have no idea why people buy FTT or Bitcoin Cash or Bitcoin BSV or BCH. So both of these are not real Bitcoin, guys. If you are going to buy Bitcoin, please buy Bitcoin itself. But we are starting to see a bit of red and green in the market over the past week. Moving over, looking at Bitcoin, it is over 30,000 right now. It's up 1.54%. It's been over 30,000 for a few days. I've been getting messages from people saying, hey man, what the hell is going on with crypto? Why is it pumping? And I just said to them, this is the stuff that we've been talking about. All the things happening around the world right now, the stuff we've been speaking about. We've been telling everyone that the bull market is coming. Next year's the year. And that's probably about 9 months from now before the next halving. So the time is of the essence. We should be stacking as much as we can right now. Last but not least, we are definitely in the greed at 56, and we've been there for a couple of weeks, for about a week or so now. Last week we were neutral, but now with everything that's happening with Blackrock, Fidelity, Invesco, all of these ETFs applications, if they do get approved, it will be huge for cryptocurrencies. All right, moving over to the Twitter highlights. We've got Lark Davis, and this could not be true. This is not going to be truer than true. There is about 2.25 million Bitcoin sitting on exchanges. Microstrategy bought 12,000 Bitcoin this week, which equals a little over 0.6 of the remaining supply. There's not enough cheap Bitcoin for BlackRock, Fidelity, as well as Invesco. Turbo scarcity coming. So one thing that people really don't understand is these guys, like for example, if BlackRock and Fidelity and Invesco do get their ETF, they have to buy Bitcoin. That's part of what they have to do. That's what an ETF is, which means if they're going to put a few $1 billion in there, they have to buy Bitcoin to that value and hold that Bitcoin, because that's what they've promised people who are buying an ETF. Now, if there's only 2.25 million Bitcoin left, that means that when these guys come in and want to start buying, it's going to be very, very scarce. There's not not going to be a lot of Bitcoin left on exchanges, which means that you and I are not going to have the opportunity to buy Bitcoin. This is why we've been saying get as much Bitcoin as you can and hold it in your own self-custody wallet, because if the ETF comes, we have no idea how high Bitcoin will go in the next few years. All right. Next up, BlackRock wants ETF, Fidelity wants ETF, banks buying MicroStrategy as promised as a proxy to Bitcoin. Sailor just bought 0.66 remaining of the remaining exchange coins. Now North Carolina has passed a bill exploring Bitcoin in their treasury. Remember, there's only 1.88 Bitcoin left. So, I mean, different people say different things. But what Luke is trying to say here is that now we've got governments that will want to start holding Bitcoin as part of their reserves, as part of their treasury. Once this happens, the more and more people that buy Bitcoin, the less and less there is. And these guys are going to buy it and hold it. They're not going to sell it. They're going to be hodlers. This is why we should be right now getting in and hodling as much Bitcoin as we can. So over to Lynn Alden, who's an economist, and she said back in 2020 and 2021, investors underestimated the impact, both positive and negative, for the fiscal stimulus would have. The current $2 trillion annualizes the fiscal deficit, of which $1 trillion is interest expense, is also is a form of stimulus, just this targeted type. So what she's talking about here is all the stimulus that happened back in 2020, the trillions and trillions of dollars that were printed. The governments are now paying about $1 trillion a year in interest. That money has to come from somewhere. They have to print it on. So even though it's still not a stimulus directly to the public, it's still a stimulus, and the money supply is expanding, which is diminishing the value of our money, which is going to increase inflation in the long term. The solution to this is sell your fiat for Bitcoin. Sell your fiat for Bitcoin and hold Bitcoin, because this will be, in my opinion, the biggest hedge against inflation. All right, last but not least for the day, guys, we are going to the adoption highlights. And we see here Tether has signed an agreement with the country of Georgia to develop Bitcoin and P2P infrastructure. So country of Georgia, Tether has signed a memorandum of understanding with the government of Georgia, aiming to position the country as a central hub for P2P technology. The collaboration seeks to foster a thriving startup ecosystem and attract international attention and investment to Georgia. Padia Ardiano, CTO of Tether, emphasizes the company's commitment to advancing global strategies and diversifying offerings beyond stability. So basically what's happening here is they've made an agreement with Georgia to bring in infrastructure for P2P and Bitcoin and the like. They've also promised they're going to bring in some money for startups. So Georgia's doing this to attract money to the country, to attract startups in the company, which is also obviously going to be good for the economy for them, and allow more decentralization. The great thing what we're seeing right now, not what most people are not seeing right now, is these smaller countries that are taking these steps. Nobody wants to be first, and nobody wants to be last. These smaller countries like El Salvador, like Central African Republic, like Georgia, these countries taking steps towards allowing P2P and crypto transactions and Bitcoin transactions are steps towards Bitcoin becoming legal tender in those. I've said this, I've been saying this for a while now. I honestly believe in the next bull run, we've got the ETFs coming right now. A lot of countries are going to be looking at the smaller countries, what they're doing. I think we're going to have more and more countries adopting Bitcoin. Hopefully, and I don't know, I'm not too optimistic about this. I think a lot of smaller countries will, but hopefully if one large country adopts Bitcoin as legal tender, then it's game over. This will be the biggest domino falling that will bring all the dominoes down, because once a large country adopts Bitcoin as legal tender, other countries are going to follow suit. We're seeing small countries now following suit, looking at adopting Bitcoin. We're seeing that even Brazil does allow Bitcoin and crypto as a form of payment, even though it's not a legal tender, but it is a recognized form of payment. Next up, we've got from Bitcoin.com, IMF Director says Iranians, Brazilians, and Saudis switching to trade in Chinese Yuan as de-dollarization gains momentum. So this comes from the Russian IMF executive, and he basically says that a growing number of countries are switching to trade in Chinese yuan, not only with China, but also with third countries. He stresses that it was wrong for the US dollar to be widely used globally, given that the US government used the currency for the purposes of national interest and economic and financial obligations of one country. The IMF executive of Russia, Alexei Mozhin, shared his thoughts on the global de-dollarization trend in an interview with the RIA Novosti Monday. He said, "We can see that the Iranians, Brazilians, and Saudis are already switching to trade with yuan, not only with China, but in other countries." He also associated the US dollar long dominance in the global economy with the lack of competition since most international settlements and deposits worldwide are in dollar. He pointed out that the US officials have sounded the alarm on the risk of the US dollar losing the world reserve currency status. Janet Yellen recently acknowledged that the use of financial sanctions could erode the dominance of the US dollar. US Senator Rand Paul similarly warned that the US is losing its hegemony. He said, I think our foreign policy has something to do with that. We pushed all of our adversaries farther and farther away from us and closer together. It is clear that this will not happen at once, but the process has begun. So a lot of the conversations I have with people when I tell them about this happening, they go to me, oh, this is not going to happen in my lifetime, blah, blah, blah. Or, the US dollar is too strong. What people don't realize is it just takes a little shift in the beginning for the shift to start happening. It's those little shifts with countries like, even if they're not major countries, and don't get me wrong, like Saudi Arabia is a major oil player, so is Iran, so is Brazil. That's a very large country. These countries moving away from the US dollar to using the yuan, I should say, for international settlements, whether it's with China or other countries, is slowly eroding away from the dollar. Once the erosion, it's like a landslide, or it just a little bit starts falling from the bottom, and then enough starts falling for the whole thing to come crumbling down. It is happening, and in time, it will start getting more and more, which is more reason to get out of fiat currencies and into digital currencies, in my opinion. Last but not least, we have very, very positive news coming out of Slovakian Parliament, who votes to approve lower crypto taxes. So a parliamentary vote by lawmakers in Slovakia approved an amendment that will reduce the taxation of cryptocurrencies, which is currently on a sliding scale. Basically, now it will be lowered to 7%. So that is the tax that people will pay on the cryptocurrencies. Before, it was a scale between 19 and 25%. In Australia, we pay up to 50% on our cryptocurrency profits in capital gains. Over there, you only pay 7%. These countries, like these laws in these countries that are happening, they are going to attract people to start moving there. People don't realize that not just businesses, everyday crypto enthusiasts, especially people who are in early, when they start getting to a point where they're making a lot of money, they're going to go, why am I staying in this country when I can set myself up in another country and pay a fraction of what I'm paying right now? The other thing also came about, another interesting amendment came out a few weeks ago after the Parliament passes an amendment to the Constitution, which codifies the citizens' right to use cash as a payment method in light of talk around the digital euro. So we've been speaking about CBDCs and the dangers of CBDCs, which again, I'll remind you guys to come to our Future of Money event, which we go into a lot of detail about that. So even though the digital euro and Slovakia is part of the European Union, they've actually changed their laws and said our people, our population has the right to use cash and they don't have to use CBDCs. This is a great move forward. It's actually standing up to the whole CBDCs. We want to see more and more governments around the world doing this and resisting that, and you start seeing more and more people moving there. And in other countries who are using CBDCs, they will start realizing that they are losing people, and hopefully we'll be able to change that. That's it for me, guys. Once again, if you haven't registered for our Future of Money event, it is running down the bottom, breakoutnow.co/future of money. It is going to be running on the 3rd of August, so it's about a month or so away from today. Make sure you get in. Spots are limited. We will send you reminders as it comes closer, and there'll be a lot more promotion around it. But this event, if you are using money and you need to use money to live, which all of us do, you need to understand what's happening with money around the world right now in your country as well as other countries, and how you can protect yourself from what's coming towards us. That's it for me, guys. As always, have an amazing week, and peace out and stay crypto. Bye.